What up? What up? How you guys doing today? So, really quick, I wanted to actually pop on here and talk about NQ. So, today is a very, very interesting day on NQ. All right. So, what I did was, all right, and again, you guys are familiar with my chart layout. Monday, Tuesday, Wednesday, Thursday, and Friday, right? Now, really quick, what I wanted to point out, right? There's a lot of people that were confused on what's happening today. And we'll talk about that. Now, watch this. Now, last week, when we spoke, okay, I talked a lot about this 1 hour fair value gap here. Let's annotate that. Whoops, 1 hour fair value gap. Now, this 1 hour fair value gap, right? Every single time we saw price pull into it, right? We got a major reaction. 1, 2, 3, and ultimately 4 times in a row. Ridiculous move, right? So, long story short, and again, this is where a lot of people have issues with the organization. The concepts themselves are actually not very difficult, but this is where you have to come on and look at things perfectly from left to right. So, the whole time that I've been mentioning this, right? Now watch. We talked about 19,683 a lot, right? Now we understand that 19,683 is a major Goldbach number, PO3 number. Okay. Now I'm viewing the 81 right now, but I'm not on, like, I'm not using the levels. Now, the reason why is because I didn't really need them. I understand where the liquidity was offered. Liquidity there, here, here, right? Okay. Now, obviously, price was pretty easy to attack these, right? PM session wide open on the Thursday, Friday, New York wide open. And again, we had NVIDIA news, which caused NASDAQ to rip down and create this 90-degree angle inside of Asia. All right. Now, the biggest thing that I need you to understand is that people get confused on London, Asia, New York AM, and how to operate in the morning when they have an idea. The whole time, right? I've been talking about these 683 highs. And the big thing is obviously sell side fair value gap, right? NASDAQ's all-time high, and I'm gonna just real quick. We're pretty high up there. All right. But what I wanted to focus on from last week into this week, right? This does look like massive liquidity that we would like to attack. Okay. And I understand this. 19,683, 1, 2, 3, and 4 highs, right? So that's why in our mind, when we're looking at all the price action inside of here, and notice how I highlighted midnight, okay? And I'm going to talk about today. But the biggest thing is, look, liquidity wide open. We have highs here. And again, that was our 683 high that we touched inside the fair value gap. We understand that 83 makes fair value gap, okay? So when you go back up like this and price spools to there and starts coming down, this fair value gap is not done yet. And so look at how price swings, right? Watch this. Go down, back up to the fair value gap, makes a lower low instead of making a higher low, or yeah, a higher low rather, or a higher high. But this is a lower low compared to this one. And you have liquidity open here, 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 here. Now watch. Now I'm giving you context of the market. So watch this. We look at this as buy side liquidity, of course. And look, now it's taking my DOL. And we'll get there. But the biggest thing, right, is when you're operating on this Tuesday. This is what? A accumulation. This is going to be a manipulation. It's going to be too far, too fast. And manipulation can easily do things that you're uncomfortable with. Because the only reason why people get uncomfortable with a narrative like this and don't end up in a move like that is because you're actually met with a little Asia high kind of thing. Asia's still wide open. And also you have like, it's 1 hour off, but I actually grown to like it like that. I like it that it's an hour off. Don't ask me why, but I like it. Now, when I'm looking at this, right? London is green, New York AM is brown, and we didn't have a PM session because, bank holiday, right? Now, Friday, let's get it. Easy one out the way. We left all that liquidity above that. And look, now we're above this here. Okay. So when we come into this, number one, even if you didn't know about the fair value gap or you expected the liquidity or whatever, you're looking at this, right? So you guys understand what turtles do. I tell you all the time to pair it to time. So when you have a previous week day turtle, these are powerful, right? I said these are power. These are powerful. These are going to be a lot more energetic than just a intraday turtle, week style turtle is what I'm talking about. Previous week turtle, right? Mondays over Friday. Doesn't have to be the high of the fucking week. All right. But from 1 week to the next, Monday over Friday, these are actually when I enjoy Mondays, I'm not gonna lie. But when you're looking at something like this, right, and Tuesday pops up. Now this is important. All right. Now, that's why I wanted to highlight midnight one more time so I can show you. Now, again, if I'm getting rid of my sessions just really quick and I can, highlight that. This candle here, this is 3 o'clock. That's London open, 3 o'clock in the morning. And you notice this is the exact candle that makes a high. And what do? People forget about London is actually possible to make a high of the day. Your midnight candle here. When you're bearish, you need to be a seller above that midnight candle. When optimal trade entry pops in, right? And everybody and their mom is expecting optimal trade entry to come up, take Asia or take London, it's not going to do it. And then watch what happens right at 9 o'clock in the morning. Takes my liquidity, almost. You're so close, right? But this is the important part. We understand that the DOL down here was not met. And I had some liquidity above here at 683 in that fair value gap that, again, price wants to come up and interact with only once more. The fair value gap was more important than the buy side liquidity. But we can verify that by time. So that's why the same way that we're looking at this, London high, right? Asia was not mitigated yet. So when you're coming down, right? Boom. I understand that everybody and their mom was looking at this right here. Let me change colors so you can see exactly what I mean here. They thought that this was probably a turtle to go long. When you're looking at it like this, right? People are now confusing this because of all the liquidity at 683, and this is understandable. This is very easy to confuse without training, right? Turtle soup, like I mentioned, was what I was looking at and looking for. So when I see this Monday high over this Friday, yeah, I'm not looking to trade up right now. Buy side liquidity has already been taken. And we're taking the lows, respecting highs. So when you see something like this here, right, and we pop down, watch. And look at the candles. Boom, boom. 9 o'clock in the morning. Optimal trade entry, everyone always thinks it's going to come up and sweep something. It does not have to sweep anything. London can be a clear high of day. We have a small retracement at 8 o'clock to go up right into a fair value gap. Then we dump lower, taking out the sell side, which has not had a chance to get mitigated in days. There's 1, 2, 3 days of us not traveling down here and leaving that wide open. How many times have we traveled upward? 1, 2, 3, 4, 5, almost 6 days in a row. Come on now. Understand what I'm saying about your market organization. The more important thing you need to understand. And watch, I'll just end up playing it out, right? Because, yeah, cool. Now watch. Even if you didn't understand that the draw liquidity was here, you could have been looking at, I forgot I gotta have a touch screen all the time. You could have been looking at here. You could have been looking at the Friday, right? But the biggest thing is when optimal trade entry has trouble in here, spooling up fast enough to start taking out liquidity in here, you can't buy that. You can't buy that. And also, are you really expecting Friday's low to stay wide open? If so, why? You need to ask yourself that question. Why would that be wide open? And after the highs were taken on the Friday, think about that. If the highs were taken, why are we buying? What's wide open? And you understand liquidity. Even if you looked at just that and you started seeing reactions from London, you have to understand the function of London. London is typically high or low of day. I wrote that too big. I'll make it a little smaller. You're going to come in, and if it's not London giving you high low a day, then it's going to be New York. Okay? You have to look for these two to give you high, low of the day. 9 times out of 10 is not Asia. And if it is, you have to understand. Now watch. There are small variables is what I want to talk about. The same way London gives you a high here, what are you going to do? This is the same exact situation from today. Same exact thing. Asia is wide open. London makes a high. We don't even take the previous day's high. But you verify this by 8, 9 o'clock in the morning. And look at your optimal trade entry. It's not a full sweep of London. It's not. It comes up just slightly, time-based retracement, into a fair value gap, into an order block. The lows are targeted. And you just hold that. It's no different than what we did today. Literally, it's the same thing. And now, are we taking my DOL yet? Almost. I want to see you take it. All right. Now, when you talk about London or New York, right? I want you to just look at these, right? I'm gonna pop back again to current, but again, showing you the vibe. London low. You have a London high right here. You have a New York low, right? Go bullish. And you have a New York high here. I like this one a lot more. So obviously, when we're looking at something like this, yeah, you could come in and say, you know what? This is my 3 a.m. open. We trade up all London and we land here at 9 o'clock in the morning. Once you see this high here, 10 o'clock, 11 o'clock, and price is just spooling down. I guarantee you this is the high of the day. Not given to you in London, but given to you in New York. But you have to understand what's slightly different when I say, yo, look at this. We pop open on Sunday. London makes a low. And watch. It's important. Okay. Look at this. London makes the low of the day. You have to be comfortable with it. Either one of these can be offered to you, and you have to be comfortable with that. So when you're looking at this, 3, 4 o'clock in the morning, look at your optimal trade entry, time-based retracement. It's just 8, 9 o'clock, it's going to retrace. It doesn't have to sweep it. It doesn't have to. And a lot of people will be uncomfortable with this because they're looking for liquidity to be taken so you could buy it. But the time here is good. And I understand if you're comfortable with, the regular way you learned ICT, OTE, I don't have to come in with the retracement levels to do this properly. The time alone does the work. London low or New York low? How do we know we're not bearish? How do we know we're trading up in the first place? Liquidity, right? And that's on your weekend, operated like that. And again, what did I say about Asia? Asia rarely survives both sides. So I'm using it as liquidity, right? There's nothing down here. We do have a little low down here, but we're not looking for this Friday's low yet because Monday's optimal trade entry is long. London low, verifying that New York is not going to take this out and is going to spool higher. And when you get to certain situations like this, you got to be comfortable with these London highs. See what I mean? London high, fair value gap, right down. It's not going to always perform a crazy New York sweep to then go down. London takes out Asia and you're good to go. And everyone's going to say, oh, well, what about this high here? You're not looking at that? No, I am. I keep all of these things available for me. I'm seeing what's available above and below me at all times. But how I'm interacting with that by a certain time of the day is different. The same way I can come on and trade a London high like this. And again, all of this Asia is taken out to the upside. We don't even take the previous day's high, but the low is open by 9 o'clock in the morning. What do you think? I'm going to try to attack London low, and you let it go. And you also had the previous day's liquidity here. Clean. There's nothing wrong with that. Now watch. There we go. We tagged it. We tagged it. Very clean, right? And look at the expansion we got to get there. And I'm going to count this for you. Watch. Come on now, bro. 2,000 fucking. Come on. Come on, bro. That's a lot of money. It's a lot of money. They're calling this DOL all day. But what I need from you is to work on organization. And again, you might be comfortable with something in your chart that you see a lot, like Asia. But you're not going to let that dictate your only method of trading or your model. If something in here doesn't feel right, you need to be able to address that. So if you're saying, yo, I'm only comfortable with like, New York optimal trade entries, I need New York to sweep London, sweep Asia for me to take a trade. Otherwise, okay, you're going to automatically get finessed into this every single time. And look, right? High of the day, high of the week, lower high, like I mentioned, London high. But if you were sitting there not thinking about London being high of the day, then why are you buying this? Why? Why? Look what happened in London. Look, I see all this, right? We see all the consolidation down here, so it makes you in your mind want to try to buy this. I get it. All right? But this is the problem. You could come in here and start thinking about the actual candles. Don't leave this to chance. And there's no way you're going to take a lot of loss unless you are over leveraged and you don't have a game plan. Watch. You can trade the OHLC of this right here. Okay. And again, if I throw in 90-minute cycles, I'm going to show you this, right? What's important here? Before I talk about OHLC real quick, what's important here? Now, if you guys are familiar with 90-minute cycles or not, we're going to talk about these. But this is important. All right. You could have seen your 90-minute cycles, which is basically representative of AMD, right? For those who are new here, and I'll have a full video I'll break down either today or tomorrow. I'll do it again. I actually have another AMD video out. I will look to, I guess, get that posted here. Or I might just make a second one. I don't know. But long story short, Q1, Q2, Q3, Q4. AMD X. Okay. If you guys are familiar, day theory, okay, you know what I'm looking at right now. This is what we call an AMD turtle. You have to look at this. When the bottom of Q1 is not taken, right? But the top is. Q2 is telling you, yo, this is a great spot to look for shorts. The buy side liquidity above the 90-minute accumulation for New York is taken in this session. Every session has a 90-minute cycle style of AMD. Like every single session has an AMD. Look at this. London, Q1 through 4. Asia has a Q1 through 4. And so does New York. Now we're on PM sessions Q1 through 4. Okay. But this is important. And you see how we actually came and took the target right as New York distribution was ending. But the biggest thing in terms of participation here with this concept is, again, I'm talking about the AMD turtle. New York Q1, the very top of this is taken. So when all this starts to manipulate, it's going to, again, expected price action. It's going to give you a V, W, M, W, upside down M, like just dumb shit that you're uncomfortable with if you're not really watching it. But this is actually really easy to trade. And then what are you met with? Now I'm going to do the simple one just because it's there. Fair value gap. But even if I'm not using this fair value gap, when Q3 takes out Q2 and Q1 is not taken yet, and we're in a distribution cycle, a distribution cycle is what? We talked about liquidity voids. Okay. This is a real distribution cycle. It's not going to stop once it starts going aggressively down like that. And Q1 is the target and beyond, where the Asia from last Wednesday was the target also. Previous Friday, Thursday. All these are targets. Even if you had a bias of wrong and you wanted to look for, buys underneath London or underneath Asia, that made sense in a way because you had 683 up there offering you a lot of buy side liquidity. The problem is you need to come in and look at what's happening on your screen right now and make sense of the narrative and the context. Time-based retracement. London high of day, like I said. You have to understand the function of London is to give you the high of the day. So when all of this fails to meet me back here, oh shit, fails to meet me back here, right? You have to understand the objective. You can hear it in my voice how much I love these types of concepts. And again, I'm going to show you something. I mean, we didn't look at it right this second, but here, I'll show you what the Goldbach levels look like. Ready? Watch this. So I'm going to drown that out, and I'm going to look at 243, and I'm going to upshift it and show you. Now, let's do it like this. 243 is really big right there, but I want to come in and use a smaller one to see if I can kind of pinpoint a perfect entry for myself, right? And I took NQ earlier in the day, and we were already done. But watch, ready? I'm up 4 on the DR shift, okay? Now watch. Even without all the stuff that I just described. Again, we're talking about Goldbach levels. How to use these to your advantage. Now watch this. Now, number one, before I get to the best one, I want to talk about this here because of the time. Now look, this is between 4:45 a.m. because we're on 15 and 9:30, right? When you're inside of this 81 and you see how price action does it, I talked before in my last video about how this is fractal. There's a dealing range above you and there's a dealing range underneath you at all times. So what I can actually come in and do, watch this. Additional range, okay? It's going to give me a second one. So now it looks crazy, right? Sure, whatever. I've talked about this. I want to show you this one, and then I'll go back down here. Ready? Or my bad, we'll do it vice versa for a reason. All right. Now, the area, right? Again, I'm talking about London to New York, that transition between both, that optimal trade entry. And again, we already highlighted and let's annotate again because I like to do that a lot. London high of day, right? Now, we took out a little bit of liquidity here and left this one open for later. And we'll talk on that next video. But just so I could really get you comfortable with this, right? Watch. Okay, we're good. OBS is good. I would have some trouble with my OBS, so that's why I'm constantly checking that to see if it's still recording. But London high a day is in, but I want you to understand the reactions in here. What do we talk about? When price is moving inside of a dealing range, as disgusting as this all is, it's straight noise to me. I could come in and give you what's happening in here, but I don't need to right this second. But the most important thing is you understand where that high is and where your low is of that dealing range. You understand. Now, even if you didn't understand that price is not actually bullish, and this is only coming to run back into the high, right? Perform a little stop run of liquidity and then drop down lower, right? Now, the biggest thing. I told you before, and again, let's take off the sessions. When you're in a dealing range, and again, 81 is great for intraday, right? We looked at the EU, but we're also looking at NASDAQ. I told you how you could run EU with the same 81 for about a week or so. NASDAQ's a lot faster and a lot different. You can run through multiple 81s, as you can see, and NASDAQ just won't stop. So you're going to need to come in with a higher PO3 and use what we call a wireframe. But if you're down on this 81 using one at a time, yes, you could come in and participate at this high. No problem. And you can see it. The same way that I said, yo, when you know where the high of your 81 is and it's highlighted, 19,521, it's highlighted. It's right on 19,521. It's completely telling you if you were bullish here, you knew to get out the trade there. It completely told you. If you were sell side and you know that the price based on context is bearish, you know to take shorts here. You know to hold through this because it's going to have trouble getting through that. And where's your real low? 19,440, right? You take the entry off the high. We talked about 90-minute cycles. And we talked about the target. Look at that. Look at that. Come on, bro. Okay. And again, the more I'm getting you comfortable with this, I'm telling you, dealing range is complete. And you have to get comfortable looking at it. We go right through that one completely, but look at where we actually make this long ass candle from. What did I tell you before? Liquidity void level. Liquidity void level. You have to understand price is not going to move without these Goldbach levels being in control. Now, this video is more for everybody. It's for the public and for my students in my Discord. But this is one I wanted to jump on here and really talk about today because it's important. I'm going to leave some of the more complicated stuff I want to do with my students in my next little segment I have for them. But this is, I think, an important narrative that I wanted to talk on. And the more that we get into more about time-based algorithms, liquidity, and power of 3 liquidity, and stop runs. Okay. Right. Where does price stop? Slightly above your EXT level. Now, you get a run that goes a little higher, and that's fine. And I'll explain this as my last thing. I talked on how there's dealing ranges above and below you always. Now, somebody might actually see this and say, oh, maybe we're bullish. We're at the, really husky candle. It broke the high here. Maybe it's not coming down. When you see how price actually exits this dealing range to stop run the one before it, now watch. I'll show you what I mean. Okay. Look at this. Watch. It's already touched the high here, and you would have seen that. When you go back up, it only runs into your EQ level. Look how perfect that is. You could have easily traded the high of the day if you were up at London and known it. You're not getting back above this dealing range. High. It came from a premium. You need to sell it. There's liquidity all underneath you. And again, this is 19,683 level, which is completely, it completely told you. It completely told you where it was going to go. Right here, right? High, EQ, comes down. Now watch this. Never want to go current. I just want to see what this looks like. A little side mission, right? And there you go. You wanted this shit explained? There you go. Monday high of the day is the high of your 729 dealing range. It comes up and makes a small move inside of where? Your order block. Look at that. That's your order block level, right? And what is that to my left? Is that not an order block? Come on now. Open your eyes. The more that you watch these videos from me, you will understand. Goldbach levels are what the market is really using to run itself. And look, every single time we've had reactions from that same area I'm talking about. 683. Every single time. And what do you think we're going to do? You understand the objective and you fucking sell it. Where do you target? Premium, you target a discount. And what did I talk about with yesterday's concept? Liquidity, right? But not just any liquidity. What did we talk about? PO3 liquidity. The failure when it came down here to touch this low, what do you think it's going to fucking do, bro? You better not look for any more longs quite just yet. Now, just so you can fully see what I mean. Okay. And again, price only retraces slightly only because we hit a DOL. See? And look, it's not really bullish. Plenty of opportunity in there. If you missed all this, do not feel bad about it. You're learning. Accept that. Okay? All right. I have to jump on a 101. I will catch you guys in my next video. This was such a fun time.